Tesla CEO Elon Musk wrapped up 3 days of testimony this week in a trial over his controversial funding secured tweet in 2018. In that tweet, he said he was considering taking Tesla private with the quote, funding secured. That's the problem. Shareholders say the tweet was misleading and that he lied about the securing of the funds. Shareholders say that led them to losing millions and millions. After that tweet, Musk says that he had no ill motive and his intent was to do the right thing for shareholders. For an in-depth look on what's happening with Tesla and Musk, I spoke to Andy Wu, assistant professor at the Business Administration at Harvard Business School, and he begins by talking about the earnings that came out.
It continues to be business as usual for Tesla. They are delivering plenty of units in 2022, but the gross margin, as you pointed out, is concerning. The decline in that is concerning. But again, we have to keep in mind, if we benchmark Tesla against traditional automotive OEM, there's still plenty of room there to work with for Tesla. And overall, it's favorable to see that they continue to move significant amounts of units in the millions.
In my small time I had to research this, the average gross margin for car companies, gross that is between 13 and 21%. They're coming in the mid, let's say 20s, for example, and that's down from where they were before. So at this point, Tesla is, yes, better margins than the average company, but not exceptionally better to make it worth so much more in terms of a valuation standpoint. How do we value a company like Tesla? Is it a car company or is it a tech company?
Well, I'm sure there's many investors that are currently invested in the company that want to view it as a tech company. Of course, it's hard to currently see that in the company's current form because, of course, the automotive OEM business is obviously generating most of the revenue. I think the more optimistic investors here are looking at the future of autonomous technology that Tesla is developing, as well as the possible future for Tesla in developing a significant advantage in battery manufacturing and robotics as well.
Let's talk about the company now. They've had price cuts, which has been controversial. I won't get into the complaints about the price cuts. I'm just going to take it at face value for now. But that has a real impact. There's a reason why they're making price cuts, because they obviously need to move inventory, and nobody cuts prices voluntarily. There has to be a business reason why you cut prices. That ultimately has an impact on the bottom line, doesn't it?
Yeah, well, I think looking at the price cut decision in the short term, of course, interest rates are up and overall demand is down. And so, this is a great way to push some sales. But at the same time, I think cutting price actually is something that's been traditionally part of Elon Musk's strategy. If you look at the history of the company, they started very high-end cars and have been going down and down market. And overall, this is a chance to move the Model 3 from a luxury segment into a more general mainstream segment of the market, which is much larger. And that's consistent with the general idea here of getting massive scale in the company. The company has already made significant fixed cost investments in autonomous technology, battery manufacturing, the charging stations, and so on. And you need to sell a lot of units in order to justify and spread that fixed cost.
Let's talk about what's happening in China. The factory's opened, it's closed. It's open, it's closed. If there's all this demand, whatever the prices they're selling the vehicles for, if there's all this demand, why do you need to close or pause manufacturing? Wouldn't you want to keep the factory humming along?
I can't speak to the details of why they made those decisions, but I can say that overall, the Chinese market is certainly more competitive for Tesla than, say, in Europe or in the United States. And overall, there's ways to go for them on distribution and such. In terms of the specifics of manufacturing, as we know, in many industries, there's been challenges with maintaining manufacturing in China due to the recent pandemic issues.
And of course, when you cut prices, that impacts all the other automakers as well, because everything's relative. And I want to get your take on what this says about the entire industry as a whole. We've seen good numbers overall, but profit is still hard to come by.
Yeah, well, in the traditional automotive industry, the margins are quite thin. And as we're seeing here, this might precipitate price competition, a price war between electric vehicle manufacturers. That's going to be definitely tough for Tesla and the other companies. But at the same time, overall, to the extent that cutting the price on electric vehicles across the board grows the electric vehicle market overall by cutting into the traditional combustion engine market, will overall allow these companies, including Tesla, to get more and more scale in their manufacturing, and particularly on battery production.
Let's talk quickly about Elon Musk as the person, or the Twitter person, as we'd like to call it. It's been tough the last couple of months, right? He's taken a lot of heat from the general public on what he did with Twitter, and even prior to taking over Twitter, there was a lot of political heat, if you will. How much has that, can we say, is behind us, or is it still something that there's a risk that investors need to consider? Because at the end of the day, you might be investing in Tesla and the EV market, but you really are investing in Elon Musk to a large extent.
Right. I think many of the investors in Tesla are there because of Elon Musk, and those investors should be watching carefully and thinking about Elon Musk's outside business activities. I think first and foremost, Elon Musk is way overextended beyond what we'd normally expect of a CEO of a major corporation. Tesla's board has already been clearly publicly upset that it seems from their perspective that he's been quite distracted with Twitter. And at the same time at Twitter, there's quite a complicated business situation there. I've written about Twitter, and it seems it's a very difficult company to turn around. And so he's going to perpetually, over the coming months and years, have to really direct attention over there, even if he steps back as CEO.